If you've been asking yourself, what are unit trusts and do these work for me? I already have life insurance, I already have NSSF. Where do they put my money and how does this work? What are the interest rates? Which company should I go with? These are all the questions we're going to talk about today in this episode. How unit trusts work, in particular here in Uganda. Let's get into the episode. Hi, welcome to this episode. I'm Gabriela, and on this channel we talk about money, we talk about personal finance. How can you manage your money so that you reduce the stress that you have it grow, and you're able to attain your goals. If you're new to this channel, welcome. If you're a subscriber, thank you for staying. Let's get into today's episode. Today we're going to talk about unit trusts. How do they work? A number of people have been asking me, and the way I can simplify it is that these companies that have been authorized by Capital Markets Authority will get money from different people, and then they will invest that money. So they put their money in different platforms. For example, they loans to the government. They will get the money they've collected and give it to the government in the form of treasury bills and treasury bonds, which will have an interest. Sometimes they also get this money and they invest it in the shares. So when the companies get profits, they share the profits with the investors. In summary, that's how I can explain the unit trust. So now that we know what unit trusts are, let's get straight to the question most of us ask. How do I benefit from a unit trust? The advantages that come from a unit trust, I would really start with, you get your money when you need it. When you need your money, you put in a request, and within 24 hours, you usually have your money back. This really does help because your money is working, it's getting interest, but when you need it, you will get it back as and when you need it. That's the first benefit, which is something that you will not get from a fixed deposit account like with the banks. And if you've put your money in bonds, if you're to get the money back from the bonds or the bills, you will have a cost that comes with it. So that's the first benefit that you get from the unit trust. And then the second one, of course, there's the interest. Now this interest, you earn the interest every day and it compounds. So if you've made 50K today, tomorrow the interest will earn interest. So it keeps growing. That's another benefit that the unit trusts have. And then, when you have money in your account, somehow the money just goes. Things happen, you get social events coming up, plot, things like that. So you find that you spend the money on your account faster and with less friction. You just swipe your card or you just go to the ATM. So when the money is on the unit trust, you find that it's still accessible, but you have to think about it, send an email to them, and then they can send you your money. So that brief resistance also helps you avoid spending. That's another benefit that I would give with the unit trust. And those are the main ones, the main benefits that come with unit trusts. Now, what interest do they give you? Their interest ranges between 10 to 12. So right now it's at around 11.4% interest rate. That's per year. So they will get that one and then they will divide by 12. So that's the one they will divide and give you per day, depending on how the market is doing at that time. And every month they will give you a statement showing you how much interest you've earned every day. And at the month they give you your interest. It's on your account. When you want the money, you're able to get it. You might be thinking, this is too good to be true. How do unit trusts make that kind of money that they give me that kind of interest? How do they make their money? Because they don't give you, you don't have any charges to open a unit trust. Nothing. How unit trusts make their money? They have a 2% fee. Now that 2% is what they make. They get the 2% off the interest, off the profits they have made. If they got all your money from the different people, they invested it, what they earn as benefit, as dividends, as interest, they will get 2% and it will be theirs before they distribute to the rest. That is how they make their money. So the cost of having the unit trust operate is not directly to you. You don't incur a cost directly. That is how they make their money. So you can be at peace. It's not a scam and it's regulated. So if anything goes wrong, you're able to follow up. Now, the next important thing is, where can you go to open a unit trust? Their companies that are listed and they're regulated by the Capital Markets Authority. So I'm going to leave a list on the screen of some of those companies, but I'll have a link in the description of the official page of the Capital Markets Authority where you can have their contacts and their details of when you want to open a unit trust. How does it work? What are the starting fees? They all have forms that you fill in, and in those forms there's like a risk assessment, when do you want your money, medium, long term, a number of other things. So you fill in the paperwork, and then you have a deposit of 100,000, which is still your money. It just activates the account. So you put the 100K, and after that you can deposit money like in 50K denominations any time, but even less than 50K, they'll still receive their money and it will be added to your account. How do you put money on the account? You can use an agent. I've seen options of mobile money lately, like you transfer from mobile money to their account. Like there are a number of options these days. So you have your money there and it is safe. There's an episode that I made about the 5 accounts that you can have to organize your money. I'm going to leave it in the description below. Among those 5 accounts, you can have a unit trust. So you can watch that episode next if you'd like to see how do I add, I already have a bank account, how do I add a unit trust to my money system. Now, the final issue that I would like to talk about when it comes to unit trusts. Sometimes you may wonder, people are telling me life insurance, someone else is telling me shares, SACCO, cash rounds. You know, there's so many places where it feels like you already have NSSF. It feels like you have your money all over the place, you know. How do you know if the unit trust is actually for you? If it makes sense, or if you already have the bank accounts, why should you have your money in another place and it's like all scattered? I feel like there's nothing that is for everyone. Everything has pros and cons. I would recommend a unit trust, but if you feel like it's not for you, that's also okay. A unit trust comes in very handy when you're working towards saving money. Like you want the money to accumulate. If you want to buy a plot of land, if you want to start a business and you like sondering your capital, if you want an emergency fund, if you want the money to accumulate, a unit trust is a good place to have it. The bank account, you need money that is readily accessible for day-to-day expenses, for like you just need to be liquid. The unit trust is liquid enough that when you need it, you can take it out, but it is not too liquid that you can just spend it like that. You know what I mean? So that is where the unit trust comes in handy. But always assess, because when you look at NSSF, that's more of long term. When life insurance, that's also more of long term. So having different, chunks, like long, mid-term, depending on what works for you. At the end of the day, when I share this content, my intention is to let you know about things, assess, and if it is something that you're interested in, go for it. I hope you found value in today's episode. If you have, please like, please subscribe so that you don't miss the next episode. I'll see you in the next one. Bye-bye.